Thanks for having me this morning. As mentioned, my name is Barclay Keith. I'm the CEO and one of the co-founders of Moment, located in Atlanta, Georgia. I'm going to steal your table up here because some of the examples I'm going to go over, I don't want to hack the names up too bad. We're going to cover a little bit of background about myself, a little bit about Moment, which we'll dive into later when I present as well. Then we're going to talk about fintech and AI and how that's really impacted the future of fintech as well. My background, joined the military at 17, spent the first 6 years of my adult life in the military. Got out, used the GI Bill to go to college, get a graduate degree, all that fun stuff. Ultimately ended up at Bloomberg in New York for my first really career stop as a professional. That really opened my eyes up to the impact of fintech. They'd really revolutionized bond trading in a very short period of time and made a huge amount of money doing it, again, as a platform play within the fintech market. You don't traditionally think of Bloomberg as a fintech because it's a big, huge media conglomerate. They make the vast majority of their money on that platform side. So did that for a couple of years, moved over to the hedge fund world. As a veteran, didn't see the impact that I wanted to see, and so ultimately moved to Green Sky Credit in Atlanta, which is one of the fintech unicorns that IPO'd a few years back. So did a couple years there, post-IPO, took a year and a day off, and then started Moment with my co-founders. And so what is Moment? Moment is enterprise-grade infrastructure for real-time financial services. Think real-time lending, real-time payments, pieces like that, all built for the enterprise where they can truly own that customer experience end to end. And so again, we allow these enterprises a turnkey solution to offer these financial services downstream to those consumers very efficiently and effectively. We'll dive into this a lot more later. I'm presenting as one of the venture companies, so I'm not going to spend too much time of that before we move on, and I want to make sure we do leave some time for questions as well. Diving into fintech, I like to generalize the history of fintech into three really major periods. And of course, you can get really deep, go back to the 60s, all the payment processors, things like that. But I really call it pre and post mobile. Because again, that mobile infrastructure, the smartphones in our hands really revolutionized the way we interact with financial services. And so we think of pre-mobile as pre-2008. PayPal really paved the way to modernize these financial services where us as consumers started to really get comfortable with these digital transactions. In 2015, it was the very first year that we saw more transactions happen on smartphones than in branches. Again, this is less than a decade ago. We've seen a massive amount of change over the last decade, but 2015 was that first year where it was really that tipping point where, again, that mobile phone, that smart device in your hand, became how you mainly interacted with these financial services. And now we've seen it move beyond that embedded smartphone into embedded into those interactions where you as a consumer are gonna see it on the, be it your smartphone, be it, whatever device you actually access financial services on, it's gonna be seamless and embedded into that experience. And so embedded's that really next movement in fintech where again, it's fully automated, it's real time. You as a consumer kind of have it as an afterthought, right? You go from, am I going to consume this financial service to, how am I going to do it most efficiently? And you, at this point, don't even really think twice about it. Keying in on lending, because again, I think this is really one of the most representative space where in the last 20 years, you've seen loans go from weeks to days to fund to we're in real time where you can take out a loan and fund in minutes. In the early 2000s, the vast majority of transactions happened at a in a branch. You're gonna be walking into that branch, you're gonna fill out paperwork, you're gonna wait a couple days, you're gonna hear something, you're gonna have to come back. It might take a week to a month to fund. Again, think mortgages, think even personal loans would take that long. With PayPal, with some of those other folks I mentioned earlier, in that mid-2000s, we started to see that digital acceptance of lending from the consumer side. Again, major shift towards smartphones, mobile interactions, really enabling the consumer to have control over those financial services versus the bank. Again, realignment of interest started to happen at this point. So we see those funding modes go from weeks to months to days to weeks. Again, think about Lending Club, PayPal, things of that sort that really allowed you to fund much quicker as a consumer. And now we're seeing folks like Moment that are coming in and embedding these services naturally where you're gonna see them in the marketplace seamlessly. Think about home improvement, right? You go through the trouble of walking in with contractors to get all these quotes, you finally get to the point where you found someone who's gonna tear out your kitchen, put in a new kitchen. At that point is when they offer you financing. You as a consumer have already made the decision, I'm gonna buy this kitchen, it's how am I gonna pay for it? So again, this lending product being weaved in where it takes minutes to maybe a day at most for you to consume $40,000, $50,000 to remodel a kitchen, even 10 years ago wasn't something that was viable. And so when we get into the later stages and we talk about kind of the future, we're going to talk about some alternative data points that have really made this something that we can actually do in real time now. And so a massive shift just over the last decade is what has made this something that's even possible, frankly. We couldn't do this 10 years ago. We didn't have the data sources to do this, and we didn't have the data infrastructure to do this, quite literally. When we think about all of these financial services, especially embedded finance, really this is a structural shift. This is a change in how we interact, a change in how we do business with each other, and how we consume these financial products more importantly. It's gone from you're thinking about walking into a bank to you're looking at what services offered to you at that time of consumption. Again, we're realigning how you consume these financial products by embedding these financial services. Embedded finance is not the only structural shift that's really become massive over the last few years. AI, obviously, big buzzword going around, but we're starting to see some huge impacts come from that. At Moment, we're leveraging AI for a variety of things, and we've been doing that from day one, 4.5 years ago when we started this company. Be it the consumer experience, be it fraud, how we underwrite these merchants, how we manage the portfolios on the back end for banks, we've tried to sprinkle AI pragmatically into our portfolio of platforms to really ensure that we can leverage it to optimize our experience both for the employees on our team as well as the consumers downstream. How we manage this company and how we've built this company has been heavily impacted by AI. And so you're probably thinking, oh, okay, you're a small startup, you're built from scratch, much easier to do AI at that level, right? Well, we're not the only ones doing it. We've got some really big players, and I've got some examples here I'm gonna go through, that's hence the pad out, so I can make sure I don't hack these names up too bad, that are really doing it successfully as well. Capital One has Eno. Eno's another kind of cool name. Natural language SMS assistant. They've done over 10 million consumer interactions that are fully customized to that consumer through this platform in just the last 3 years. Now that's massive. Again, you're taking that interaction between humans out and you're fully customizing this at a way we couldn't do even 5 years ago. You got Bank of America with Erica. Again, another cool name. Eno, Erica. It's a chatbot with over 500,000 question variations where if you come into Capital One and you're looking for resources, you're looking for answers, it's really, really accurate. And again, you've taken that consumer out of the loop of interacting with humans where you're waiting. So now consumers have that information on demand. They've also obviously lowered their overhead because they have this automated tool that can now answer your consumer questions. And JP Morgan with the best name of all, Cash Flow Intelligence, the only not cool name there. They've actually ripped 90% of the manual interactions on their treasury management to where, again, that same department is now exponentially more effective. 90% of their manual transactions have been removed because of this AI software. You've also seen Jamie Dimon say, hey, we're really effective with this cash flow intelligence tool. We're going to invest heavily. So if you look at their last few press releases, Jamie Dimon has mentioned their investments in AI repeatedly over their last few years. And again, this is very telling. I don't think you see some of these big banks, again, that are slightly resistant to change, slightly resistant to tech, rolling out and investing that heavily if there's not true value there. And so again, it's not just fintechs like us, it's the big dogs who are now coming out and seeing the value of these AI-based tools, leveraging it for operational efficiency, consumer interactions, a wide variety of those pieces. So what are the implications here? We think about how can we leverage AI and how can we also be prepared for the future with AI integrated. Ultimately, I think of AI as an amplification of effort. I don't think we're gonna have developers who are just cut out because of ChatGPT and OpenAI and things like that. What I do see is an amplification of their effort, right? Your mid-range developers, your senior developers, your junior developers will all be able to produce more with less. They now have the tools to amplify their efforts. Again, leveraging those tools is also going to create a situation where we have to reshape how we interact, how we train our workforce, but also the need for skilled workforce. I think a lot of the lower level positions will be eliminated, but again, it will open up a lot of the higher level positions, things like prompt engineering, all of those pieces, but again, are just going to be a change in the workforce. Ultimately, this creates an opportunity, and again, there will obviously be challenges, but it creates a massive opportunity to amplify and enhance your workforce. And I think as leaders, that's how we should be thinking about this. Sure, it's gonna cut some of your overhead, but how do you amplify your workforce with the various tools that are out there? And that's what we're really focused on at Moment. As I mentioned, We've weaved this into a few spots already, but I can tell you every single department in our company is looking for opportunities to leverage these AI-based tools to, again, amplify the workforce. It's really powerful stuff. Diving into what we see as the future of fintech, and again, already hit on the AI, ML-based solutions. That's become massive, right? Not just in the customer experience, but also credit underwriting, fraud underwriting, merchant underwriting. All of those pieces are starting to be influenced and accepted from a compliance standpoint, more importantly, from a lot of the consumers on that end. We hear blockchain, again, big buzzword, but that's actually showing some impact. One of our fellow portfolio companies, Figure, actually came out with the first mortgage settlement at T+1 built on blockchain for mortgages. And again, this is normally a 30-day process. They've moved to a single-day process, fully auditable, and again, massively impactful versus that 30 days that it would have taken otherwise. And so I think, yes, there's actually some true value from blockchain finally being created. We're also seeing things like a universal profile. Imagine walking into a mattress store, and before you even walk through the door, you're already qualified for a loan. They know what your income looks like. They know what your background looks like. They know your credit score, all of these pieces without you ever applying. And so that universal profile will be really powerful because you as the consumer can control that data. Really importantly, you as a consumer will also have a lot of the heavy overhead of consuming a lot of these products taken out with this universal profile. And the last thing that I really highlighted on earlier, alternative data. 10 years ago, it's a FICO score, 1, 2 others. Now we're seeing everything from how you spend on your cell phone, how you spend on all of your utilities. Those lower FICO bands especially, you can get a huge amount of information out of this, and it always goes as deep as looking at your social footprint, right? How do you interact on social media? How do you actually interact on everyday life? And so this has really opened up a world where I think, credit will become much more accessible because we can see and make better decisions based on these alternative data sources. All right, thank you again for your time, and appreciate it.